Welcome to this comprehensive guide on how to buy covered calls on Robinhood. Covered calls are a popular options trading strategy that can help you generate additional income from your existing stock portfolio. To get started, you need to have a Robinhood account and some stocks in your portfolio. A covered call is a type of options trade where you sell a call option to another investor, giving them the right to buy a stock from you at a predetermined price, known as the strike price. The first step is to select a stock you own and want to sell a covered call on. Look for stocks with a high trading volume and a stable price. Next, go to the options trading section on Robinhood and select the stock you want to trade. Then, choose the expiration date for the call option. The expiration date is the last day the option can be exercised. Choose a date that aligns with your investment goals and risk tolerance. After selecting the expiration date, choose the strike price for the call option. The strike price is the price at which the buyer can buy the stock from you. Choose a strike price that is higher than the current market price to maximize your potential profit. Once you have selected the expiration date and strike price, you can set the number of contracts you want to sell. One contract represents 100 shares of the underlying stock. Before placing the trade, review the trade details and make sure everything is correct. Check the premium you will receive, the strike price, the expiration date, and the number of contracts. After placing the trade, the premium will be credited to your account immediately. If the stock price is below the strike price at expiration, the option will expire worthless, and you get to keep the premium. However, if the stock price is above the strike price at expiration, the option will be exercised, and you will have to sell the stock at the strike price. This means you will miss out on any further gains above the strike price. To minimize your risk, make sure you are comfortable selling the stock at the strike price and that you have a clear understanding of the potential outcomes. It is also essential to monitor your trades regularly and adjust your strategy as needed. In conclusion, buying covered calls on Robinhood can be a great way to generate additional income from your existing stock portfolio. By following these steps and understanding the key concepts, you can create a successful covered call strategy that aligns with your investment goals and risk tolerance.